Welcome back to Trade Talks. Today, we're diving deep into the latest speech by Federal Reserve Chair Jerome Powell at the Jackson Hole Economic Policy Symposium. This speech is packed with insights that could impact the economy and your finances. Let's break it all down. Jerome Powell's recent speech has given us some crucial insights into the Federal Reserve's current stance and future plans. Let's get into the details. In his speech, Powell highlighted several important aspects of the current economic situation and the Federal Reserve's approach to monetary policy. Let's start with the overall economic growth. Economic growth. Powell noted that the economy is growing at a solid pace. This is a positive sign, indicating that the measures taken to stabilize the economy are working. He emphasized that despite the challenges posed by the pandemic, the economy has shown remarkable resilience. Inflation. Inflation has been a major concern for many of us. Powell mentioned that inflation has declined significantly. Over the past 12 months, prices have risen by 2.5%, which is closer to the Fed's 2% target. This is a big improvement from the high inflation rates we've seen in recent years. He attributed this decline to the Federal Reserve's restrictive monetary policy, which helped restore balance between aggregate supply and demand too. Labor market. The labor market is also showing signs of improvement. Powell emphasized that the labor market is no longer overheated and conditions are less tight than before the pandemic. This means more people are finding jobs and wage growth is stabilizing. He highlighted the significant benefits to society that come from a long period of strong labor market conditions, such as low unemployment, high participation, and historically low racial employment gaps. Monetary policy. On the monetary policy front, Powell confirmed that the Federal Reserve is pivoting towards rate cuts. This shift is aimed at supporting economic growth and ensuring that inflation remains under control. He explained that the Federal Open Market Committee's FOMC primary focus has been on bringing down inflation, and appropriately so. Future outlook. Looking ahead, Powell expressed confidence that inflation is on a sustainable path back to 2%. He also highlighted the importance of maintaining a strong labor market while achieving price stability. Powell mentioned that the task is not complete, but significant progress has been made towards restoring price stability while avoiding sharp increases in unemployment. So, what does this mean for you? Lower interest rates could make borrowing cheaper, which is good news for anyone looking to take out a loan or mortgage. However, it's also important to stay informed and be prepared for any economic changes. Let's dive deeper into some of the key points from Powell's speech. Impact on borrowing and lending. With the Federal Reserve pivoting towards rate cuts, we can expect borrowing costs to decrease. This means lower interest rates on loans and mortgages, making it more affordable for individuals and businesses to borrow money. This could stimulate economic activity by encouraging spending and investment. Impact on savings and investments. On the flip side, lower interest rates could mean lower returns on savings accounts and fixed income investments. It's important to consider diversifying your investment portfolio to mitigate the impact of lower interest rates on your savings. Look into options like stocks, real estate, or other investment vehicles that might offer higher returns. Inflation and purchasing power. With inflation declining, the purchasing power of your money is likely to improve. This means that the cost of goods and services may stabilize, making it easier to manage your expenses. However, it's crucial to keep an eye on inflation trends and adjust your financial plans accordingly. Job market and wage growth. The improvement in the labor market is a positive sign for job seekers. With more job opportunities and stabilizing wage growth, individuals can expect better employment prospects. This is especially beneficial for those who were hit hardest by the pandemic, such as lower-wage workers in the service sector. Long-term economic stability. Powell's emphasis on maintaining a strong labor market while achieving price stability indicates a balanced approach to economic policy. This balanced approach is crucial for long-term economic stability, ensuring that the economy can withstand future shocks and continue to grow sustainably. In conclusion, Jerome Powell's speech at the Jackson Hole Economic Policy Symposium provides a comprehensive overview of the current economic situation and the Federal Reserve's plans. The key takeaways are the solid economic growth, declining inflation, improving labor market, and the shift towards rate cuts. These factors collectively paint a positive picture of the economy's trajectory. Thanks for watching. If you found this breakdown helpful, don't forget to like, subscribe, and hit the notification bell for more updates on the economy and financial tips. Stay tuned for more insightful content, and see you next time.